I did my first move this month, called the bank. I've got a mortgage of 250,000, and I split it in four. I called them. I split it in four to do four payments in a month, which did low down my capital and interest left over. So it showed that I from 49,000 now I owe 46,000. So it saved 3,000, but I couldn't put more money right away. So I have to call back the month after, and then if I want to pay a little bit more, then it could go along. So I'm starting mode in that. In some of your videos, you were saying that a loan, like I don't have a loan, I have a placement. It's called a CELI in Canada, and I have $15,000 there. And I called to be able to pay, a lump sum for my mortgage. And of course, the guy said, "Well, you better keep your money there because you're getting 6% of return with your placement, and with interest, you'll make more money than if you pay your mortgage." And I doubt that.
I doubt that too, Helene.
But I need to hear it from you. I'm like, so what is it really? I
Okay.
mean, is the 6% going to help me more, or should I put it towards my mortgage? I
Right.
just need to hear something from you.
All right. Here's what you need to hear from me, Helene. And this is what I'm going to tell everyone. If you keep your money in that investment,
Yeah.
can you predict how much money you will then earn by keeping it in that investment? Is that possible?
Well, he told me that I would make 13,000.
There you go. So it is possible to do that, right?
Yeah.
Okay. So now your question then has to be, if I take that money and put it on my mortgage, how much interest will I save? And if you don't know how to figure that out, we're lost. And that's where the bank has us.
Yep.
There's no way to measure. And you're doing some very good things to save money to pay off your mortgage faster. You're doing some very good things there. But do you know how much interest you're saving when you do those good things?
That's what I saw, the difference here.
You saw the
Yeah, it was
difference
like,
in principal, how much you owe.
hmm
You didn't see the difference in how much interest it cost you to make your decisions.
right.
And that's what I'm talking about here. So
Yep.
if it were possible to save $7 for every extra dollar you're putting on, but you found out you were actually saving $3, would you then be concerned?
Yeah, that's what I need, the math.
Right. And so this is what we're talking about. Because you don't know that you're not optimizing, then there is no concern because you have no idea how much interest you're saving or losing. And because of that, you can go to sleep at night and say, I'm doing the best I can by doing this, but I don't know how well it's helping me.
I did ask one question to the bank. I said, how much interest am I saving by doing the four payments?
Listen, before you answer, I want everybody to be able to clip this because I know what you're getting ready to say. All right, be ready to clip. Ask the question again and tell us what you found out, Helene.
Well, it took her a while, but she said you're saving $142 in interest by doing paying four times in the month.
Oh my goodness. Oh my goodness. Oh my goodness. Oh my goodness. Listen, folks, let me put your loan on here, Miss Hadley, because see, listen, you're in Canada, right?
Yep.
And Canada, folks, has low interest rates. Plus, they don't do their loans the same way we do here in the US. The US loans are compounded monthly, and Canadians compound semi-annually. Therefore, they pay less interest at the same rates. They have different rules. Okay. So, plus, they have lower rates to begin with. So, let's take a look at this. I'm going to put this on the screen. Okay. And let you tell me, as soon as I get this up here, get Brett Whistle going, how much did your loan start out to be? About
250.
250,000. Okay, that's right. The mortgage is 250,000, right?
Yep.
All right, and the interest rate is about
2.54.
2.54. Okay, that sounds like a Canadian mortgage to me. And most Canadian mortgages are 25 years instead of 30 years. And which is yours?
25. Correct.
25. Okay, so that's 300 months. Okay, so now we're looking at that. And while we're at it, Helene, most Canadian mortgages will only allow you a certain amount to prepay before they penalize you
Yes.
for prepayment. Okay, so
yes,
folks,
30,000.
all right. So now it doesn't mean you can't prepay. It just means that it's going to cost you to prepay. So, folks, if you have a prepayment penalty, I just need you to do one thing: change the word penalty to cost. How much is it going to cost me to prepay? Then, when you find out the cost, now find out how much interest you're saving when you prepay. Then you'll know if it's worth it or not. Okay? All right.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.